Okay. Okay. So we're going to start off by looking at the dollar index. Oh my gosh. It's too beautiful, ne? Trading is nice, ne? I love this game. Uh, I think it's Patrice Evra. You guys know him, ne? When the Manchester United player, he does this video, so he says, I love this game. And he's always smiling, always joyful. Okay. No, like trading is so beautiful, guys. The most beautiful thing that I've ever set my eyes upon, aside from the word of God, my wife and my son, it is too lovely. So isn't it too lovely? Isn't it? Isn't it? Okay, let us start off. When I'm looking at this, I'm just joyful, and then just looking at it, and I'm just seeing how beautiful it is, how lovely it is, how everything kind of interact with one another, and we want to see those type of things occurring within the team, like, sorry, within the market. I'm always thinking about the team. So this is one of the things that we have seen as well, right? We have seen things occurring. Sometimes some of the things can be regarded as a coincidence, but there is no such thing as coincidence, especially with things that are regarding the market, right? Are we okay with that? So remember what we spoke about, I think it was beginning of the year. Was it beginning of the year? Was it beginning of the year? Guys, I'm talking to you, please. When we spoke about what? About the dollar index. We need to, please guys, make sure that you engage, because this is a group activity. So make sure that you engage. So beginning of the year, we did speak about the dollar index, right? And throughout, when we were speaking about the dollar index, we spoke about something that is more important. We spoke about how the yearly price movement can have a effect upon the market. So right now, initially this thing was regarded as a thesis, right? So some of the things that we bring forth, especially when it comes to trading, some of the concepts, they come off initially as barking a prototype. Let me put it that way. It's like a prototype of an approach. You understand what I mean? So most of the time we'll bring a concept onto it. And then after we bring the concept to, for me, like in most cases, I'm not gonna lie, I don't back test. That's why, like, I don't back test. Some things I just do them, and I will look at them from like this type of range. Like I'm not going to go from here and then just look at, oh, this was occurring, this was what. Yes, I will check those things, and then I will see them. Like initially, like I will see them. Like sometimes you just have to look and be like, oh, okay, 1, 2, 3, 1, 2, 3. But again, most importantly, I would look at the current landscape of the market, because like the current times of the market are not similar to the previous times that we have had within the market, right? So now, are you guys still following? Oh yeah, like Paul, yeah, we did do that. So most of the time I will just look and be like, oh, okay. I don't know how I do things, but I know I do things. But I can't go into details of like how I would see certain things, but I just see them. So now we brought forth the concept of how we can actually look at the market based on the yearly price movement. How the theory came about, I don't know, but we did it. That's how we do things. So we were able to kind of like look at certain market movement and market behaviors, especially the yearly price movement in terms of like looking at the yearly price movement. And what we did is that we brought forth the application of the Fibonacci retracement tool, right? The main objective behind bringing forth the application of the Fibonacci retracement tool basically was used in a way that we can actually be in a position to actually see or kind of like estimate the relationship between the buyers and the sellers, basically the relationship between the supply and the demand, isn't it? So upon doing that, what we actually did is that we looked at it from certain aspects, right? We looked at it from a certain aspect. And then when we looked at it from this aspect, what we said is that, okay, now, provided that we looked at this from this part, let's say maybe we start off from 2022, right? 2022, it will probably be somewhere around here, isn't it? And it continued up until somewhere around here, isn't it? Are we okay? So you still remember this application, isn't it? So basically what we did is that we looked at it and said, okay, so this is the yearly price movement, right? This is for the year 2022. So with this yearly price movement, what we did is that we looked at it from this area to that area. So the main objective behind this is that whatever that occurs throughout the course of the year, throughout this rally price pushing to the upside, one thing that we do not want to see occurring, or one thing that we actually do want to see occurring, or one thing that can actually be an indication of the upcoming year's movement, right? We said that we look at the 50%, right? We said that below here, these are buyers, above it's sellers, basically demand and then supply. And then we look at the closing price by the end of the year. So where did the market actually end the year on? So the yearly close was here, right? Which was below the 50%. And we said that if the market does close below the 50%, basically saying that if the market does close closer to the low, the yearly low, that means that we will be looking for a further continuation of the reduction, meaning that the upcoming year, we will not be expecting the market to actually liquidate the high. We will be looking for the market to actually liquidate the low, right? So the same application was also applied here, right? I'm still a bit rusty, guys, so please bear with me with my rustiness. I will get energized as we continue, right? So this is basically the yearly price movement, right? Obviously, you can look at it from there, but we're looking at it, when we say we're looking at the yearly price movement, we're going to look at the yearly low and also take into consideration the yearly high, isn't it? So throughout this process, what we have seen is that we have seen the market, it pushed to the upside, but where it closed, it's actually closed here, which is closer to the yearly low, right? Closer to the yearly low than the yearly high. So that means that that's one of the reasons why we were expecting a further reduction in price, not expecting this area to be liquidated, isn't it? But yet, in the very same light, we're not neglecting the entire situation of what is currently occurring. We're not neglecting that we're still trending within a consolidative state. And again, we're not even neglecting that on a macro, this one, it will be a reflection of a micro scale. This price movement, it will be a reflection of a micro scale based on the entire price movement, right? And this one will be a reflection of this push to the upside here. This will be something that we will look at more as a macro scale, meaning that like this ones, they will still have more authority as compared to this one. Are we okay? Please let me know if I am losing you. Are we? You see, this is where Jeremiah 33 verse 3 comes into play, where he says, ask me and I will tell you remarkable secrets you do not know about things to come. This is where Jeremiah comes into place. This is where Jeremiah comes into place. Like the thing is that like some of the things I cannot even tell you where to find them. They are no books that I can say, oh, this book has 1, 2, 3. You'll get the gist of it, but the application of it is something that even I do not even know how I came about it. So I'm not saying that I am not even close to, it's just things occurring, right? So this is the type of situations that we will be looking at going forth, right? So now, in this situation, what we have seen is that we have seen what we have been expecting, okay, isn't it? Meaning that in this process, during the push to the upside, this is still that high that we were expecting. We were not even expecting the market to liquidate. And yes, indeed, we did not liquidate that price level, right? We're currently seeing the reduction in price. But again, even though we're looking at it and saying, okay, we're seeing the reduction in price, we still have to clearly understand that regardless of whether we want to see 1, 2, 3 occurring, we shouldn't neglect the overall information that is being relayed by the market. So the market will tell you that, okay, I'm about to violate this principle or this theory that you have. So it's up to you that you have to adjust to the changes that are currently occurring within the market. The thing about the market and the thing about trading and the thing about the information that is being presented and brought forth within the market by the market is that it comes to us so vividly that we are sometimes neglecting it based on our personal beliefs and based on what we expect to get from the market. The problem starts with the expectation of the market to behave in a specific manner, but yet it fails to do so, isn't it? You remember the expectations that your parents had for you. Like they had expectation of how your life would be, but they are not living your life. All they can do is be aligned with what information that you're bringing forth, the information that you are relaying about the way your life is going, how you're developing, and everything. They can accept the information because if they don't accept the information that is being relayed by you about how you want to conduct yourself, then there will be a conflict of interest, isn't it? Next thing you know, they will be like, I disown you, what, because you're not living up to their expectations. That's the same thing that occurs within the market. The information that is being relayed, it will not match your own expectation of how the market should behave, should be and should behave. So it will bring forth the information to you. You either accept it as the information and not oppose it, because once you start opposing that information, that starts a conflict of interest because the market is not even interested in what you have to think. Okay. Are we okay? I'm still warming up, guys. Don't know, even I'm a crescida, man. I'm a crescida. I'm a crescida. You have to warm me up first before you drive me. You can't just wake up, start, and go to work. You have to warm me up while you bath. I must be in idle nyana. While you're bathing there, it's warming up so that you can have a smooth journey. So I'm warming up. Okay. Now, in this situation that we have faced, right? I brought forth certain things within the team as well. So this was broken down in several ways. And my question is that, do you guys read what I sent to the team? Do you guys like legitly read? Like I sent something, do you guys read and be like, oh, I see this, I see this, I see that? Guys, do you guys read what I sent to the team? It's very vital. It's very vital. Okay. Initially, what I sent to the team is that I sent forth this aspect. This was our main concern. This was our main concern. This area here. The zone. Eh? The zone na. This was our main concern, right? So our main concern was based on this swing high. And one can actually even look at the entirety of the swing highs, but we will focus mainly on this swing high, right? Because like what we have discussed is that we looked at it based on the Doe theory, and we said that based on the Doe theory, the market it's considered to be in a, let's say for example, it's considered to be in a bullish trend up until a significant swing low has been broken, right? So the market is considered to be in a bearish trend up until a significant swing high has been broken, right? And during the entirety of this push to the upside, what we have seen is that we have seen this area here being liquidated, therefore changing the landscape in terms of how we should view this market. This is based on the Doe theory, meaning that based on the Doe theory, the expectation of this, it's a continuation of the rally, meaning that we should be looking for a deeper push to the upside. So now the question that I brought forth is the significance of this swing high being liquidated. How significant is it? So now you have two theories that come together, right? And these two theory now, when they come together, they start to have a bit of a conflict with one another, right? The other one is the Doe theory. Right? And the other one is the margin theory. That one is mine, guys. I'm claiming it. I'm stamping it. I'm joking, but let's at least take some credit now. You know, in life you must at least attach your name to something. I don't even have I haven't even attached my name to something, guys. I don't even have a thing that I say that this is the margins approach. I don't have, guys. Come on. Like today, let me just I deserve something, guys. Hey, guys, don't go tell people that I've got my own theories here. So because now you're going to make me look like another order blocker here, and I don't like those type of things. But margin theory, it sounds more economic, ne? Yeah, let's look at that way. Yeah. So based on the Doe theory basically says that swing high, when it's broken, we can expect a further increase in price. So the margin theory says that when we are looking at the relationship between buyers and sellers, especially based on the yearly price movement, the closest and the price level in which the market closes or the end of the year close determines the direction of the upcoming year's movement. Basically, if we do closer to the low or the yearly low, means that we will be looking for a further continuation of the drop, meaning that we will expect the yearly low to be liquidated before the yearly high, right? Okay. So now, these two were in conflict, obviously, because now you have this high and then you have this low, right? The Dow theory says that we have to see a further continuation of the rally. But the margin theory says that we have to see a further continuation of the drop based on this premise. Based on the fact that we have closed the year, we have closed, the yearly price movement has ended with the closing price being closer to the yearly low, meaning that the expectation is further drop in price. Isn't it? Up to so far, neither theories have been proven right or wrong, isn't it? Because at the end of the day, we haven't seen a further continuation of the drop. And at the end of the day, we haven't seen the liquidation of either of this area here, meaning that technically speaking, me and Dow, we are still in a stalemate, isn't it? Are we okay with that? So we will see. We will see. We will see. Me and Dow is still in a stalemate, right? So now, when looking at this during the push to the upside, right? Again, if, for example, depending on what occurs here, that means that we will be looking for the push to the upside. That will be the completion of this wave. Technically speaking, one can consider this as basically a wave that can push to the upside, because this is the initial one, the second one. We're currently trading within the third one, isn't it? Or even one can even look at it from this entirety. Are we okay with that? This is on a macro scale, isn't it? This is on a micro scale, meaning that we will be looking at it in regards to this, meaning that the push to the upside will be something to be considered. Remember, these are two, I'm giving you two possible scenarios, isn't it? Because at the end of the day, regardless of however we looked at it, remember what I've sent to the group, regardless of however we want to look at it, right? We are looking at it from this perspective entirely. This entirety of this is based on this perspective, meaning that we are still trending within the second phase of the drop, right? We're still trending within the second phase. And if we're still taking within the second phase now, the question is how can I put it? The question is that, how can I put it? Is that how, basically, how can I see? How can I put it? The question is that what would be how can I put it? The question is that the shape of the second phase, that is the question. Let's put it this, the shape, how it will turn out to be. Because we're still within the second phase, isn't it? If we're still within the second phase, meaning that the shape of that can actually change. You get what I mean? You remember when you were 18, you're still 18, right? But you are still you. You are still you. Remember when you were 18, flat stomach, everything. But now you see the shape that you have taken. That is basically it. You still you, but you have taken a different shape. So that is this. Next time when you think about it, look at it from this perspective. We are still trading within the second phase of the bearish drop, basically the wave itself. We're still trending within the second phase. Now the shape of it will be determined by time, similar to your shape. It was determined by time. And the things that affected you, like alcohol, meat, those things. I'm saying this because I don't have I used to have, but I dealt with that issue quickly. Now I have a flat stomach, not six pack, but six packs are hard. I don't want hard stuff. So it's just a smooth, So basically, like the shape of this thing, it will be determined by whatever is occurring within this thing, right? So what will occur within this, it will determine its shape, isn't it? So meaning that this can be the shape that is currently taking, which is the consolidative state that will actually lead to a drop in price, right? Or this, we can have this type of shape where it pushes to the upside. So now the shape it will take, it will be far different from the one that is currently within. It will all be determined by things that are currently occurring within, or things that actually have that have influence within the market. Like for example, what we have seen that actually wanted to have an influence upon the market, right? The first one is that something occurred that was supposed to have an influence within the market, isn't it? So that thing that occurred that was supposed to have an influence within the market occurred at 104. Some of the things are strategic, but people avoid to see the strategies that occur within that, right? One of the things that we have seen, it was this one. The 15th of July, when did this occur with the Donald Trump? It was here, right? Yes, it was here. Here. Somewhere here. What a coincidence, isn't it? I always love it when things occur by coincidence. It's just a coincidence. So what was the main objective of that attempted assassination, and why at that particular time? And why? Was it a coincidence? What was it supposed to do? The main objective of that, it was to push price to the upside. It was to give the dollar a bit of strength, right? It was to give the dollar a bit of strength. And afterwards, that thing that occurred, and then we also saw the previous, after this one, and then we saw Joe Biden on this situation here, when he was actually the letter was released, I think it was a Saturday or a Sunday, saying that he will be stepping down as leading candidate in terms of running for office, and then Kamala will actually take a step in, right? So with that being said, that is that we didn't see too many changes within the market because there was a sense of trying to feel out. The investors, what they will do is that they will try and feel out, is this doable? Like they're trying to feel like the temperature behind all that is occurring. And also they're trying to look and do an assessment in terms of like, okay, can this person really, can he really like increase the how can I put it? Can he really like have an impact upon the market? Can we see something different? Can we see something that can occur within this situation, right? Can he actually lead the country? But we all know that she can't actually do that, right? Then another situation that was brought forth, it was by they tried their best in order to keep the price above 104, right? But there are certain things that when they occur, they just occur too nice. Like no matter how much you would think that certain things will have an impact upon the market, at the end of the day, the market always relay a specific information regarding its future. So the minute we started seeing this consolidative state itself, it rendered this itself, it was already a problem that has been presented. It was already a problem that has been presented within the market. But again, look at the changes that occur. Because remember, initially what we looked at is that we looked at the market from this entire area, and then we did structural comparison basically of this entire situation. And we say that this like structure, I'm using the term structure too loosely because like